Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. In this video, we're going to cover the 11 action steps that you can take right now inside of the personal tax planning template in order to get yourself to the halfway mark of our 2026 conversion flowchart. Okay, so if we hop over here real quick to the 2026 conversion flowchart, let's see where we are supposed to be to arrive at the halfway mark. So in step number 1, we entered our actual year-end traditional IRA balances. We projected our traditional IRA growth out to the RMD starting age. We projected our RMDs through life expectancy while also considering QCDs, HSA rollovers, and other distributions. Then we entered our estimated or actual 2025 taxable income. We projected our taxable income through the early retirement drop. Then we arrived at our projected taxable income all the way through the RMD starting age before considering Roth IRA conversions. We added in our RMDs, which were calculated up here in phase 1. We considered the impact of widow's penalty, and now to get to the halfway mark, we should have our projected taxable income going out through life expectancy. In this video, the 11 action steps to take right now will ensure that you have completed all of the steps in the first half of the 2026 conversion process. And then in the next video, we will start down here in phase 3, working on identifying room in our brackets during the sweet spot years, and also identifying high bracket taxation in RMD territory. All right, coming back over here, action step number 1, if you are currently employed. Have you entered your projected W-2 wages out through your anticipated retirement year and month? You will do this on the main tab of the personal tax planning template. So if we hop over here to the personal tax planning template, here are the rows for W-2 wages. I would expect you to enter your actual amounts for 2025 in this column right here. And then I would expect you to project into the future out until whatever age you are planning to retire, the amount of wages that you would realistically expect to receive, also considering the month in which you will retire in your final year. For example, if you were to retire partway through the year, then I would expect the W-2 wages from the previous year right here, like this $52,000, to go down to account for the fact that you didn't retire on the last day of the year, but you retired at some point during the year, for example, this $27,000. As I mentioned moments ago, you will complete that step right here on the main tab of the personal tax planning template. You will enter the amounts for 2025, and then you will project out into the future based on a realistic cost of living adjustment. Okay, coming back over here and looking at action steps 2 and 3. If you are currently collecting Social Security, have you entered your 2026 projected benefit plus your cost of living adjusted projected benefits out through life expectancy? And note that you will do this on the Social Security entry tab of the personal tax planning template. Conversely, down here, if you are not yet collecting Social Security, have you entered your projected benefit for your expected start year plus your cost of living adjusted projected benefits out through life expectancy? And again, you will do this on the Social Security entry tab of the personal tax planning template. So hopping back over to the personal tax planning template, here is the Social Security entry tab. If you were collecting in 2025, or if you are starting to collect in 2026, then you would have a projected or actual benefit entered right here. If, on the other hand, you have not started collecting in 2025 or 2026, you would enter your projected benefit for the year in which you expect to start collecting. In this example, we have spouse number 2 starting to collect in 2033, and then the cost of living adjusted expected benefit would be projected out into the future, out to life expectancy. Okay, coming back over here, action step number 4. Have you projected your interest income through life expectancy, considering the level to which you expect to transition out of equities and into fixed income as you move toward and through retirement? Also note right here, you will do this on the interest and dividend entry tab of the personal tax planning template. So hopping back over here to the personal tax planning template, here is the interest and dividend entry tab. For each account that you have which generates taxable interest, you will enter the actual amounts received for 2025, and then you will project what your expectation of interest income received will be going out through life expectancy. Now, when we're talking about the reweighting of your portfolio out of equities and more into fixed income as you approach and enter retirement, the way something like like that might be visible right here in the interest income entry area is that at some point as your portfolio gets rebalanced into fixed income, we would expect to see an increase in the amount of projected taxable income reported going out into the future. So for example, right here, this couple is projecting that as of 2036, maybe this is the year they enter retirement, or maybe this is a certain year after they have entered retirement. This is an example right here between these 2 years where if you expect a significant transition in the underlying portfolio out of equities and into fixed income, then as a result of that, I would expect to see an increase in the amount of interest income being projected as compared to the prior year before the rebalancing of the portfolio occurred. So thinking about this action step one more time, if your expectation is that you will be more heavily weighted in fixed income as you go into retirement, then I would expect your interest income projection to be increasing as you move further along in the personal tax planning template. Alternatively, if you were expecting your fixed income weighting to go down, then I would expect your projected income to decrease as you go further along into the personal tax planning template. And on a similar note to that, if you were planning to live on some of the money on an annual basis that is currently invested in fixed income, then as you take the money out of fixed income investments and use it for living expenses, I would expect to see the corresponding interest income that you're projecting on a year-over-year basis to go down. So those are some considerations for you to think about regarding how your portfolio will be weighted as you approach and enter retirement, as well as how you will be utilizing the money that is in fixed income investments, if at all, to cover living expenses in retirement and what the result of using that money will be on your interest income projections. All right, let's do a quick hot tip from the Nerd Crew. Remember that phase 1 and 2 of the conversion flowchart are the preparation for doing Roth conversions. In other words, if we come back here, all of phase 1 and all of phase 2 right here get us ready to do our Roth conversion analysis. And phase 3 is where the real fun begins. We start doing our analysis of the room in the brackets right here and the high bracket taxation over here in RMD territory. And then we perform our strategic annual Roth IRA conversions to fill those lower brackets in the sweet spot years. So right now is the perfect time to get phase 1 and phase 2 knocked out so that we can get down here to phase 3 where the real fun of Roth conversion planning will begin. Okay, action step number 5. Have you projected your dividend income through life expectancy? And when doing so, are you considering the opposite of what you determined in step 4? Now let's think about that. If you are transitioning out of equities and into fixed income, then because our fixed income investments are increasing, we would expect, generally speaking, our interest income to increase. However, conversely to that, if we are moving out of equity, then we would probably expect our dividend income to decrease right around the same time or in similar fashion to our interest income increasing in step 4. To say it more simply, if you are transitioning your portfolio one way or the other from equities to fixed income or vice versa, we would probably expect to see in the personal tax planning template interest income going up while dividend income is going down, or conversely, we would expect to see dividend income going up while interest income is going down if you were transitioning your portfolio the other way. In addition to projecting your total dividend income, have you broken it out between qualified versus non-qualified dividends appropriately inside of the personal tax planning template? And note that you will do this as well on the interest and dividend entry tab. So coming back over here to the personal tax planning template, this is the section for total ordinary dividends right here. Ordinary dividends is what will be on your Form 1040 tax return line 3B for years that are already filed. For example, when filling filling out your 2025 column if your 2025 tax return is already filed, then the grand total right here at the bottom of this section should be the same number that is on your 1040 tax return line 3B. And moving down a little bit further to the qualified dividends section, the grand total for a year that has already been filed, in this case we're talking about 2025, this grand total here should agree to your Form 1040 tax return, line 3A. So to summarize, make sure that you are projecting both your total ordinary dividends but also your total qualified dividends, because as many of you know, the qualified dividends are subject to the preferential 15% long-term capital gain rates, whereas non-qualified dividends are subject to your marginal tax rate. Okay, action step number 6, have you appropriately projected capital gains through life expectancy? And have you used the capital gain netting calculation tab to net together number 1, capital loss carry forwards, number 2, short-term capital gain or loss, and number 3, long-term capital gain or loss, with the appropriate result carrying to the appropriate section of the personal tax planning template main tab. And also note that you will complete this process on the capital gain netting calc tab of the personal tax planning template. Okay, let's quickly run through the capital gain and loss cheat sheet as a quick refresher for everyone on how capital gains and losses are supposed to be netted together. So step number 1, long-term capital gain plus long-term capital loss plus long-term capital loss carry forward are netted together, resulting in one number. That number will either be a net long-term capital gain or it will be a net long-term capital loss. Then step number 2, short-term capital gain plus short-term capital loss plus short-term capital loss carry forward are netted together, resulting in one number. That number will either be a net short-term capital gain or it will be a net short-term capital loss. If the results of the 2 steps above are as follows, you have a net long-term capital gain and you have a net short-term capital gain, then the net long-term capital gain will go in the long-term capital gain section of the personal tax planning template, subject to the long-term capital gain preferential rates, which are either 0, 15, or 20% depending on your other income. And the net short-term capital gain will go in the short-term capital gain section of the personal tax planning template, subject to your marginal tax rate. On the other hand, if the results from step 1 and 2 above are a net long-term capital loss and a net short-term capital loss, then up to $3,000 of capital loss can go against your ordinary income. This will occur in the short-term capital gain section of the personal tax planning template, and that will occur starting with the short-term capital loss being used up first, and then the remainder of both the short-term capital loss and the long-term capital loss will retain their character, and they will go into the carry forward, either short-term capital loss carry forward or long-term capital loss carry forward, until such time as they can be utilized in future years. Then finally, if we have mixed results from steps 1 and 2, in other words, a net long-term capital gain and a net short-term capital loss, or conversely, a net long-term capital loss and a net short-term capital gain, then the first thing you do is you net the 2 items together, i.e. you add together the net long-term capital gain or loss with the net short-term capital gain or loss, resulting in one number, and that number could be any of the 4 following items. It could be a net long-term capital gain, net long-term capital loss, net short-term capital gain, or a net short-term capital loss. And then second, depending on which of these 4 items it is, you will follow the rules above for how to treat the remaining amount. In other words, if it's a short-term capital gain, you follow this rule. If it's a long-term capital gain, you follow this rule. And if it's a short or long-term capital loss, you follow this rule right here. Now hopping back over here to the personal tax planning template, here is the capital gain netting calculation. This schedule will complete all of the netting calculations in the appropriate order that we just went over in the capital gain capital loss cheat sheet, and it will take into account your capital gain distributions, and it will put the appropriate amounts for short-term and for long-term in the appropriate place on the main tab of the personal tax planning template. And of course, that would be right here on this row for short-term capital gain and loss items, because both short-term capital gain and up to $3,000 of capital loss will go against ordinary income, and that's why this row is in the ordinary income section section of the personal tax planning template, and then any long-term capital gain will go down here in this section subject to the preferential rates. Okay, let's move to action steps 7 and 8. For action step number 7, have you projected income that may come from pension plans? And number 8, have you projected any income that may come from inherited IRAs? Note the projection of pension income will occur on the main tab of the personal tax planning template, and projected income that relates to inherited IRAs will occur on the inherited IRA tabs. All right, going over to the main tab of the personal tax planning template, here are the 2 rows for pension income. If you are receiving pension income in 2025 or 2026, you would put the actual amounts received in these cells right here, and then you would project out into the future the amount of pension income that you would expect to receive under the terms of the pension. So in this case, there may or may not be a cost of living adjustment associated with the pension. There could be a whole variety of different terms and conditions that go along with the pension, and therefore it's going to be based specifically on the facts and circumstances underlying whatever pension arrangements you may have. Now for inherited IRAs, these are the 2 tabs we have available inside of the personal tax planning template. You will enter the value of the inherited IRA at 12/31 of the year prior to the year when you received the inheritance, and then based off the information on this page right here, you will calculate the amount of RMD that you are required to take from those inherited IRAs over the 10-year period in which you are required to take it. Now coming back over here to action step number 9, have you projected the 5 primary types of distributions that will come from a traditional IRA? The 5 primary types of distributions that are in question for action step number 9 are regular distributions, RMDs, QCDs, QLAC funding, and HSA rollover. Note that distributions which are Roth conversions will be handled in steps 7 and 8 of the 2026 conversion flowchart. If we hop back over here to the flowchart, remember that in phase 3 there are 3 steps, 7, 8, and 9. These are the steps right here where we will be dealing with actually determining the amount of Roth IRA conversion. However, before we get there, we're going to project these 5 types of distributions inside the personal tax planning template, and we're going to do that on the RCTS tabs, for which there is 1 for each spouse. Regular distributions from IRAs will go in this column, QCDs will go in this column over here, HSA rollover and or QLAC funding will go in this column, and then your RMDs will be calculated automatically in this column right here. As I just mentioned, those 5 types of IRA distribution transactions will be considered on the Roth conversion tax strategy tabs, also known as the RCTS tabs inside the personal tax planning template. Further note that contributions to traditional IRAs and their associated deductibility must also be considered as part of our planning process, and that information will be handled on the IRA entry tabs of the personal tax planning template. Going back over here, there is an IRA entry tab for each spouse. This is for spouse number 1. You can see here are the rows for IRA contributions made between 1/1 and 12/31 of the current year. And then here is the row for IRA contributions made for the current year, but made between 1/1 of next year or the future year through April 15th of the future year. You will also have the choice right here to toggle yes or no as to whether you or your spouse are covered by a retirement plan at work. This selection right here will determine the extent to which you have an income limitation, if any, on the deductibility of your traditional IRA contributions. And then if we hop back over here to action step number 10, if you have any basis in your traditional IRAs, have you run your numbers through the Number Crunch Nerds Form 8606 Mega Calculator to determine the portion of any traditional IRA distributions which constitute a return of basis? Coming back over here to the personal tax planning template, we are going to have a Form 8606 Mega Calculator for each spouse, because as you know, everything related to IRAs needs to be handled on a per spouse basis. This Form 8606 606 mega calculator, by the way, is completely automated and will determine the extent to which you have a non-taxable distribution of basis from your traditional IRAs, and it will use the information that we have entered both on the IRA entry tabs as well as the RCTS tabs to make that determination. And then finally, coming back here to action step number 11, have you reconciled your 2025 column inside the personal tax planning template to your 2025 as filed tax return? Every single item that shows up in your 2025 column in the personal tax planning template right here should agree to your as filed 2025 tax return, and it should agree down to the dollar. For years in which a tax return has been filed, that respective column of the personal tax planning template represents your actual tax return amounts and the base year off which you will do your income tax projections for the future. I want to note right here that if you need help getting the 2025 column of your personal tax planning template to agree to your 2025 as filed tax return, each and every member of the personal tax planning template program can get assistance with that directly from me. Okay, not from a call center in Peru, not from chatbots that run you in circles, not from that one uncle which everybody has, and not from your friend that sells essential oils. That's right, my friends, if you are a member of the personal tax planning template program and you are stuck getting 2025 reconciled, you contact me and we will figure it out together down to the dollar. That is my personal guarantee for every single member of the personal tax planning template program. By the way, as part of our major March 2026 update, I have just uploaded an all-new graphical format quick start guide to the members area for the personal tax planning template program. So many folks have been asking for it, and now it's finally here. This graphical format quick start guide will walk you through all of the major components of the personal tax planning template so you can get your Roth conversion planning started from the moment you download the program. There are over a dozen steps in the quick start guides that spell out in detail exactly where to go, what to look for, and what to enter in each section of the personal tax planning template. The all-new 2026 quick start guides are included with your purchase of the personal tax planning template and supplement the extensive video-based tax planning training that is already included in the program. So if you're already a member of the personal tax planning template training program, you can simply log in at your convenience and check out the new quick start guides today. And if you're not already a member, the personal tax planning template and video training program is available for purchase at the link in the description below this video. Your purchase both helps out the channel and gives you a tax planning and training toolset that you can use for the rest of your life to help minimize your taxes and maximize the after-tax cash flow that remains in your family's pocketbook. So it's a win-win for everybody. As I said, you can join the personal tax planning template training program with lifetime access for a one-time access fee at the link in the description below this video. And so that's going to be it for today's video. Thanks everybody for watching, and I look forward to seeing you inside the course.